Hi. Thanks, Dhanashree, for the kind words. Now, I would like to set up the context for the session that I've sort of prepared for you all. I think we'll be covering what exactly is investment banking, how this particular space happens, like what happens in this particular space, what are the stakeholders that are involved in this space, what sort of deals happen, be it your sell side deals or your buy side deals. What are the skills that are necessary to enter into this space? Whether I would try to, answer certain questions that you might have with respect to, what are the degrees necessary or any courses necessary to actually enter into the space. I'll be happy to answer any questions that you might have. So if I tell you very honestly, if this section would be more beneficial for you all if it's sort of an interactive session where you're asking questions and I'm answering the those questions because I'm actually very close to your age. I don't have a lot of experience. I recently joined this particular organization. I've been in this organization for close to 2 years now. So I might be might when I was your age, I might be facing the same issues, same problems that you might have been facing right now. So obviously, it would be very beneficial for you all if the session is sort of interactive and we're discussing about any sort of problems, any sort of issues that you might be facing. Um, so that's about the context of this particular session. Now, Dhanishri, will it be possible to just share that PPT that you guys had prepared for me?
Yes, sir. Darshan, our IT HOD, will be sharing the screen for you today. So Darshan, can you please start with the screen share for sir?
Yeah, thanks. So quickly, before we get into the session, uh, I'll just quickly tell you about myself. So I'm basically an engineer. I did my engineering from NIT Bhopal. I did it in the electrical engineering department, and post my engineering, I joined a consulting firm. Essentially, joined there as a technology consultant and worked there for close to 2 years. I think for me, the growth that I envisioned for myself and the kind of work that I envisioned for myself was not really working for me in that particular organization, because of which I decided to pursue my MBA. Now, post my MBA, I worked with another, sort of technology consultant firm for some time, and then moved to investment banking. Currently, I'm working with Equirus Capital. It's an investment bank where we sort of look at mid-market, small cap, mid-cap sort of companies with respect to deals, be it your private equity, be it your M&A, be it your IPOs, QIPs, essentially all sort of public market, private market deals. That is what we look at. And I work in the industrial space. It's essentially the manufacturing space in terms of all sort of companies, be it your auto companies, your chemical companies, your EMS companies, aerospace defense companies, etc., etc. So that's a little bit about myself. So essentially, I've moved from an engineer to a consultant and then probably to an investment banker now. So the primary driver, what I would say for myself, was always sort of a better work, and uh, essentially good environment in terms of being stimulated with respect to the people that I work with and the clients that I work with. And that has what has driven me towards investment banking. Uh, that has been my journey so far. Can you please go to next slide? Yeah, no, next slide, please. Next slide. Yeah. So, before we get into what exactly is investment banking, can someone, any one of you all, be just tell me as to what your perception is of investment banking? Can you tell me as to what you understand of what investment banking is? Like I mentioned, more interactive session would be more beneficial for all of us. So, if you can just tell me as to what do you understand with respect to what is investment banking? Anyone?
Basically, investment banking looks after mergers and acquisitions, if I'm not wrong.
Sorry. Can only one person speak at a time? Sorry, I could not hear. Gaurav, can you Gaurav, can you please, sorry, Karthik, can you please speak?
Mergers and acquisitions means it helps in mergers and acquisitions.
Uh, okay, that's correct. But can you elaborate as to what does an investment bank help with? How does an investment bank help in mergers and acquisition? If you're aware of it.
They see
Okay,
various, yeah,
yeah,
like they
please,
see the
please go ahead.
portfolio, and the financial statements, and then they help in the acquisitions and mergers.
Okay, so yeah, that's true. That's not wrong. That's true. But from what we understand in the investment banking space as to what exactly investment banking is, it's essentially sales. You know, sales. There are two types of banks. There is a sell side bank. There's a buy side bank. Okay, so a sell side bank is essentially the one who is going to help in selling a company. You know, so at the very crux of it, any investment banking deal will be a sell deal. You as an investment banker will be helping to sell a company. So essentially, you are a salesman. Essentially, that's the crux of any job that you will work in the investment banking space. You will always be a salesman. Now, what you're trying to sell a company here. So now, like we have been talking about M&As, deals, IPOs, etc., etc. What are all these? These are again deals that happen in this space. A particular person, let's say uh, you have a private company, right? What can a private company do? They can go for a M&A, like you mentioned. They can do acquisition through an M&A. What they're doing, they're raising funds. Why they are raising funds? They're raising funds for their own business operations. So in all, it's just one company will be raising funds, another company will be investing in that company. And what will be your job as an investment banker? You'll be in the middle. You'll be interacting with the sales guy. You'll be interacting with the client, the company which is trying to raise funds, and you'll be interacting with the investor, the one who is going to invest. And what your job is to bring them together in the same space, ensure that whatever valuation this particular investor is thinking of and the valuation that the client is thinking of, you can bring them to the same terms in terms of valuation of the company, and you can ensure that the deal is going to happen. Your job at the end of it all, in terms of investment banking, is to ensure that the deal is happening at whatever valuation. Okay. So from that point of view, from that standpoint, uh, the job of an investment banker and people like me, people who have been in this space generally gets categorized into three bubbles. Okay, you will be interacting with the client, you will be interacting with the investor, and then you'll be interacting with various stakeholders who are going to be a part of these deals. So essentially, that is what investment banking is. Uh, can you please move to next slide, please? So how deals actually work? Okay, like I mentioned, like Karthik mentioned, there are M&As. So what is an M&A? M&A is essentially a acquisition. One company is going to acquire another company. Okay. Why would they acquire? They would want to acquire because there might be synergies between these companies in terms of their scale. One company would want to achieve scale. So that's why they're acquiring another company so that their top line can increase. Why else they can do it? They can do it because it's a possibility that there will be forward integration, there will be backward integration, there will be cost savings for the company. Anything and everything. There can be n number of reasons as to why one company would want to acquire another company. Where an investment banker comes in picture, they will help them in the middle. So when a transaction like this, when a transaction like M&A happens, the investor would want to do, they'll want to understand whether the company that they're actually investing money in is good or not, you know, whether they don't have any legal issues, you know, financially, if they're saying that 100 crores of revenue they're doing, whether or not that revenue is correct or not. It's a possibility a lot of scams happen. A lot of companies will say that they have 100 crores of revenue, but they might not have that the case. But that might not be the case, you know. So what does a banker helps in this middle in this? They'll help in due diligence. They'll hire a due diligence agency and essentially deal with ensuring that everyone in the middle comes to the same picture in terms of closing the deal. This is where a banker comes into picture. This is sort of an M&A. But what there are other kinds of deals as well. There's an IPO. What is an IPO? If can someone tell me what an IPO is?
Initial public offering.
Okay. Can you please elaborate a little bit?
Means private companies allowing common people to buy their shares,
Yes, absolutely correct.
getting
Absolutely.
listed on the BSE or NSE.
Yes, yes. So again, like I mentioned, in any deal, how many people are there? There were three people. There's an investor, there's a client, and there are multiple stakeholders. What happens in an IPO? In an IPO, there is a company, a client, or your target. Let's say, for example, recently, I think Grow got listed, right? Grow was the client. Then, who are the investors? Public investors. Investors like you and me. Investors like, mutual funds. Investors like QIPs. Investors like HNI investors. In an IPO, who will be the investors? These will be the investors. So the second stakeholder for you, the second people involved in this transaction will be your investors. Who will be the third stakeholders? Will be your lawyers. Will be bankers like me. Will be bankers like there are Kotaks of the world. There are other banks which are present in this particular space. So they will be the other stakeholders. What will be my job as a banker? Again, bring them on the same page with respect to valuation and everything. Essentially, job is to make sure that you are selling the stock, be it an IPO, be it an M&A, be it a private equity. In all the cases, the only difference would remain: investor will change, target will change, or the stakeholders involved will change. Your job as a banker will be coordination. Your job as a banker will be preparation of various documents, deal documents, and deliverables. I'll be talking about those deliverables as and when I move to that particular slide. But your work will be deliverables as a banker. Your work will be uh, coordination, deliverables, uh, communicating everything and ensuring the deal happens. That is your job as a banker. Again, private equity. When we talk about private equity, the only change will be investor will become a private equity. Target remains the same. Stakeholders remain the same. At the end of it all, your job as a banker will always be to ensure the deal happens. Can you move to next slide, please? Okay. So talking about some of the skills that are necessary. Now we've been talking about three heads, right? Right? Investor, stakeholders, and your clients. Now, if you think about it, what will be the skills according to you would be necessary? You have three heads, investor एक है, client एक है, stakeholders अलग है. Now, according to you, what are the skills necessary? Any two, three skills that you feel are important for any investment banker? Anyone, if they can answer.
Calculating
Negotiation.
the assets and liabilities of someone.
Okay, but that will be done by the auditor, right? There will be an auditor, right? When for example, there's a company, okay? If there's a company, the financial statements of that company will be prepared by an auditor. That will not be done by an investment banker. So what else? What else? Let's think. What else?
Negotiation skills.
Sorry, Ninad.
Negotiation.
Skills.
Negotiation. Oh, absolutely right. Negotiations. What else? What else?
Analysis.
Okay, absolutely right. Analysis, correct. Anyone else? Anyone else?
Financial knowledge skill.
Financial knowledge, absolutely, yes. Anyone else? Anyone? Okay, so we talked about negotiation, right? What is negotiation? Communication, right? You have three people, three heads. What is your job? Bringing them together. How you are going to do it? Communication. Your job will be to communicate to a client. For example, any client. What is going to happen for a client? The client wants to raise funds. If they want to raise funds, they will be very finicky. They will have their business requirements. They need funds for working capital. They need funds for capex. They need funds for repaying their loans or whatever. There might be a number of reasons why a particular client will need funds, but they'll be very finicky. They'll have their own timelines. They'll have their own pressures. So they'll be in very much pressure, and they'll keep on pestering you that why is this not happening? Why is this not happening? Why is this not happening? What will be your job? Ensuring that you're communicating it properly to them, that these are the things which are happening. This is what is a roadblock right now. What are the issues that they're facing, etc., etc. You will have investors. They want to raise fund. They want to basically invest in a particular company. They will have their requirements. They will have their targets. They will have their issues. They will be finicky. They will also put pressure on you. Your job, again, communicate it to them properly. You have a lot of stakeholders involved on a particular transaction. What is your job? Ensuring that everyone is getting whatever is necessary, and they're coming to terms with respect to everything on a particular transaction. Communication becomes extremely important. What else apart from it? We talked about financial knowledge, right? If it's financial knowledge, what does it transpire? It's essentially you knowing about a company, about an industry. And why does this help? Knowing about an industry, why is it needed? So when you are trying to sell a particular company, for any investor, you'll have to make a lot of deal documents or deal deliverables. There can be, information memorandum. There's something we call as an IM. It's basically a PPT which includes anything and everything about a particular company. You will have to prepare that document. But for that, you need to have an understanding of the industry in which the particular company works. You'll have to have an understanding about the industry, about the company in which, have to have an understanding of that company, right? To prepare that IM. You'll have to prepare roadshow documents where you'll go to an investor and show this PPT to them and try to understand. I try to tell them that this is the company or this is an investment thesis that you're bringing to market, and you should invest in this company. What do you need? You need a PPT for it, right? You'll have to prepare financial models, right? Financial models, why are they used? They are used for, again, basically what we do is we prepare an investment financial model and then send it to an investor. The investor use that model to evaluate a company, right? Now, your job is preparing that Excel, preparing that PPT. That's another skill that you need to work in this particular space. You need to have an understanding of the company, of the industry, be able to prepare PPTs, be able to prepare Excel. That becomes an extremely important skill. And that is a skill that you cannot learn from college. Honestly, I know you guys are still in college, and yes, you might be working on it, but that is a skill which you have to develop on your own. You know, you have to keep on working at it. You have to keep on making a lot of PPTs so that you can turn around a particular PPT quickly. You'll have to keep on working on a model quickly, so that you can make models and understand and explain to people that you should invest in a particular company because the model looks like this, the numbers looks like this, the financial analysis looks like this. Because this is not something based on historical. So any investor, when they invest in a particular company, They'll not invest based on historical numbers. They'll invest based on projected numbers. So based on projected numbers, you'll get the valuation. You'll get the valuation based on your DCF or based on your multiples or whatever. So you have to have that understanding, right? So from that standpoint, Excel, and by Excel, I mean financial modeling, becomes an extremely important skill. Now, how do you acquire that skill? You have a college for it, obviously. And you have a lot of courses out there, but you have to do it. It's something which is extremely important for anyone in this space to learn how to make a financial model. And honestly, even now, I face a lot of problems in models. Even now, since I don't come from an accounting background, so it does not come very naturally to me to make a model. I don't have a lot of understanding with respect to how accounting works and all that. But it's an extremely important skill. If you come from, let's say a BCom, MCom background, accounting should come naturally to you, right? So that becomes a very important skill. Accounting, learning. And I'm sure you guys might have faced this. A lot of times your balance sheet won't match, right? Trust me, that is a situation which still happens. Balancing of your balance sheet is a problem. Even now, can you think about it? Even now, after working for so long in a particular sector, even now I face that problem. So that is something which, because I honestly, I did not do it in the earlier stages of my career, that I did not put a lot of effort into accounting. But you are at that stage and you can make an effort into accounting. So that is something that will help you in the long run. It's a very small thing. Accounting is a very small thing, but again, it will help you in the long run. Okay, so in terms of skills, Excel, PPT, communication, financial analysis, etc., etc. Uh, can you move to next slide, please? And please feel free to stop me. I am rambling here. If you have any questions, anything that you would want to talk about, feel free to stop me, because I think it's extremely important that you guys actually ask your questions, because it's a possibility I'm here for some time. And if you can ask me your questions, it will be more beneficial for you all. If you have any questions, do stop me.
So there are some answers in the chat box as well. So one student had written making reasonable assumptions is also a skill, right? I think he was asking this question to you.
No, it's okay. See, it's okay to stop me, yaar. I'm very close to your age. I'm happy to answer. My own point is, I'm happy to answer. Uh, if we have to look at the chats, we can look at the chats at the end of it all. But if you want to ask me any questions, stop me. There's no problem. है ना? I think you're saying there are questions.
There was one, I have read it out to you. That was for the skills part.
Okay. What was the question? Please, can you repeat?
Making reasonable assumption is also a skill, right?
Yes, making reasonable assumption is also a skill. Yes, obviously. That is a part of your financial analysis. Assumptions. See, what you're doing based on assumptions, once you change an assumption, what is the impact of that assumption on your valuation? That is what you're trying to figure out, right? So whenever a deal is happening, there will be 100 variables. Okay. If there are 100 variables which are present on a particular deal, what is the impact of that one variable which is more prevalent? Let's say, for example, tariffs. Okay. So there is this deal that I'm a part of currently, and the company has 50% revenue contribution from USA. 50% exports कर रही है वो company essentially. Now, any investor who is trying to evaluate this company, they know Trump क्या कर रहा है. Trump is saying 500% ले आऊंगा. Now, if Trump is saying 500% tariff कर दूंगा, essentially my company, which has 50% revenue contribution from USA, will be screwed. They will not have, they will be forced to pay a lot of money to customers, right? Now, because of this tariff, my valuation will go down, obviously. What is this? This is an assumption. You and I don't know what the tariff is going to look like. We don't know how the tariff is changed and going to change and what Trump will do. But we have to incorporate that in our model, in our financial model, essentially. Now, when we incorporate that, it will be an assumption. Based on the tariff, what will be the impact on my revenue? What will be the impact on my costs? That is again an assumption. That is again a skill. Part of your financial analysis. Okay? If you have any questions, just stop me, yaar. It's a discussion. I don't want to keep on rambling because it's not beneficial for you all. If I'm taking out some time, it's beneficial. It should be beneficial for all of us, right? So please stop me. I don't have a problem with you stopping me. Okay. Where were we? Yeah. So learning curves in finance careers. So when I started out, investment banking, when I started out, like I was saying, I used to face a lot of problems with accounting. I still do. And over a stretch of, I think, 2, 3 months, I was forced to do it, forced to learn because timeline pressure is there. No matter how senior you are in a particular deal, timeline pressure will be there on you. You cannot do anything about it. You will have n number of stakeholders who will be breathing down your throats कि यार ये क्यों नहीं हुआ वो क्यों नहीं हुआ. Now you have to learn. You don't have a problem. You don't have an answer essentially. If you want to survive in this field, you have to learn. No two ways about it. For that, I had to learn. I had to put effort. I had to do a particular course that I did for accounting because I did not have that in my arsenal in terms of my skill. I had to upskill, right? So, in terms of learning curves in this particular field, the learning curve is extremely steep. You have to do everything and anything and everything you might be forced to do. For example, today your manager will come and tell you, I need a pitch on this particular company. It's a possibility you don't know anything about the industry. It's a possibility you don't know anything about the company, and you have to deliver that pitch tomorrow, first up. You have close to 12 hours, and you have to learn everything about the company in 12 hours. So, 12 hours may, if you want to turn around a pitch, you have to turn around a document. You need to know how to quickly, maneuver your way in terms of how to go about it. From that perspective, extremely high learning curve, extremely high. So that is something which is present in this particular space. And it's not just that you have to think about your academic knowledge, but you have to actually start applying that academic knowledge in this particular space. Now, I'm sure you guys might have learned about ratio analysis, right? And there are n number of ratios that we calculate for n number of companies. Your EBITDA margins, your PAT margin, your ROC, ROE, your FATO, all these ratios that you calculate. Now, how is one ratio going to impact another ratio, and how is that ratio going to impact your overall company? That is important. Practical application of one ratio becomes extremely important, and how two ratios are connected. How one change in your cash flow is going to change your balance sheet. How your PAT will change your balance sheet. How is it going to change your cash flow? That becomes extremely important. So that is something which I'm sure you guys might have learned, but that in a practical application becomes extremely different. Extremely different. In the real world, we don't talk about top line that much as compared to bottom line. But when we used to do our UG years and everything, the primarily top line was an important consideration for us, right? Again, practical application, practically things change a lot. So from that perspective, learning curves extremely high. You have to change, you have to adapt very quickly. Yeah, I think can you move to next slide, please? Okay. Now reality checks. I think primarily one of the biggest misnomer about investment banking is that it's a very lucrative career. It is a very lucrative career from the standpoint of salaries, bonuses, etc. But it has impact on your personal life. It will always have an impact on your personal life, be it your health. It will have an impact on your personal relationships and etc. etc. Time pressure is a very prevalent issue in the investment banking space. In any company that you go to, you will have to face a lot of pressure from your bosses, from your clients, from your investors, from other stakeholders. You will have to bear that. And obviously, I'm not saying people don't cope up. People do cope up. With time, people obviously get better at it. But time pressure is extremely present, and you have to be careful about it. When you're making a decision as to whether or not you want to enter into investment banking, it becomes an extremely important consideration. Whether or not you can handle the time pressure, whether or not you can handle the problems, the issues that you'll be facing on a day-to-day basis. The work is not monotonous. It's not. Every day will be a new task. Every day will be a new issue that you'll be facing. Every day, n number of things will get screwed up, and n number of things will be needed to be solved by you. Even at the junior most level, even if you are the most junior person on the deal, you'll still be forced to do a lot of things independently. And the more you become independent on a deal, the more irreplaceable you'll become on a particular transaction or in a particular team. So that becomes extremely important, whether or not you can handle things independently without the intervention of your seniors, without the intervention of other people involved in that deal. You have to manage all the stakeholders on your own. And trust me, an analyst is like 24 years old, 25 years old, 26 years old. And that analyst will be interacting directly with the CFO of a company. Directly. No one in the middle. You will be the primary point of contact for the CFO. And that CFO will have n number of problems, n number of issues, and they'll reach out to you. So when you close a deal, it's extremely rewarding. Trust me, not just the lucrative factor, but extremely rewarding from the standpoint of you are actually doing something in terms of, helping a company raise funds. So this is extremely rewarding from that standpoint as well. But obviously, correspondingly, you will be faced with a lot of issues, you'll be faced with a lot of problems. So that is something which is real, especially in the Indian ecosystem. Uh, I'm sure you guys might have known or heard that there's a mid office, front office, and a back office. Can someone tell me what is a mid office, front office, back office, if possible? Yeah, okay, I'll take it. Essentially, there are companies like Goldman Sachs, Nomura, etc. Okay. So these companies, these are, big firms with their primary market will not be in India. The primary market in which these guys do their deals will be foreign. So what they do is they hire people in the Indian ecosystem to be in their mid offices or their back offices. So the primary person who is going to handle the clients, the person who is going to handle the investors, will be somewhere in foreign, and the person who is going to actually prepare the deal deliverables in terms of IMs, financial models, etc., will be placed out in India. So that is a mid office or a back office, and the front office one, like me, you'll be working with the investors, you'll be working with the clients, and then you'll be preparing the deal deliverables as well. So if you're in a back office or in a mid office, you will not be you'll not be facing that much pressure as compared to a front office. But again, front office is more lucrative, and front offices offer higher bonuses as compared to a mid office. That's obviously the case. But mid offices are also, MNCs. So there are a lot of benefits that you get which are not prevalent in the Indian ecosystem. So everything has their own benefits and their own issues. So essentially, there are a lot of things that you should consider before moving into investment banking, which is not just the lucrative factor, but also the factor that time pressure, issues, independence, whether it's a mid office, back office or not, whether it's a front office or not. Can you handle the expectations of investors and the expectations of clients, etc.? So that becomes a very important consideration. And that is something which I think is not really talked about a lot in the uh, you know college infrastructure, I think. Um, I and I think is a degree needed. Okay, so this is something that I jotted down. Is a degree needed to get into investment banking? Okay, my primary answer to it would be yes, it's needed, especially in the Indian ecosystem. Honestly speaking, to get into investment banking, you don't need a degree. You need skills. Skills can be acquired. You don't need to join a college for it. You don't need to do a PG specifically just for it. You can join it just with the skills. In the Indian ecosystem, the problem is because you won't get the opportunities as well. So if you don't have the connections, if you don't have the uh, opportunities, if you're not getting the opportunities, then degree becomes important. But degree is not necessary to get into investment banking. Generally speaking, CAs and MBAs are preferred. But that is, the reason for it is because CAs and MBAs have acquired the skills which are necessaries. But if anyone can acquire the skill, these skills are not something which are very specific to a CA or very specific to an MBA. Skills can be acquired by anyone. You just need the opportunity. If the opportunity comes your way, obviously you'll be selected. So if your question is, do you need a degree? No, you don't need a degree. But in the Indian ecosystem, it sort of becomes the case. And there is also questions around, do you need a CFA? Okay, so I did my CFA L1. I didn't get time to do L2, L3. Now, I did my CFA post joining, not pre joining. And if I tell you very honestly, CFA is not needed. But the skills that are taught in a CFA are needed. So if you are doing it for the skills, do it. But if you're doing it to get into investment banking, that is not the case. Because for getting into investment banking, a lot of things are there, a lot of variables are there. But skills can be acquired via CFA. Yeah, so that is sort of the session that I wanted to conduct. Certain takeaways that I would want you to, take with you would be primarily communication.
Yashraj,
Yeah, yeah. Tell me, Harsh. Tell me.
so I have one question.
Yeah,
So
tell me.
you said you came from engineering background, and after
Sorry,
that
sir.
you
Yeah,
switch
tell
your
me, tell me.
career into investment banking.
Hmm.
So in between that phase, have you upskilled yourself? Have you acquired those skills? And what is the important thing that help you to be in this career in investment banking?
See,
Can you give?
hmm. What I did
Yes,
was
yes.
I was an engineer. Okay, I joined a consulting firm post that. Post my engineering, I uh, I basically wanted to upskill myself. I wanted to do a better sort of work. So I did my MBA. What I did during my MBA, I think, which was different from some of the people who were trying to get into this space, was I tried to work on financial modeling. So financial modeling becomes an extremely important skill from the standpoint of getting into investment banking, and you have to be good at it, irrespective of what sort of bank you're joining. Either you're joining a mid office, back office, front office, whatever. Primarily, financial modeling becomes extremely important because financial models are used across the field in all sorts of deals. Financial models will only be used by investors to evaluate a company, and they will evaluate from the standpoint of growth that is present in the top line. What sort of PAT margins are there? What sort of EBITDA margins are there? What is the returns that these companies are going to see? What is the capex that the company is going to do going forward? What is the realization a company is seeing in terms of price of the products and services that they're selling, average realization price. Now, essentially, all of this gets incorporated in a financial model. So Financial model, I would say, would be the extremely most important skill in terms of understanding and getting into investment banking. If you cannot make a financial model, trust me, you'll find it very difficult to survive in this field because a lot of people don't know how to do it. Trust me, a lot of people don't know how to do it. It's not something which is very complex. That is also the case. It's not very complex. If you can make a simple model, you can make a complex model also. Because the skills which are necessary to make a simple model is exactly the same as the skills that are necessary to make a complex model. The only difference is scale increases. That's it. A little bit of complexity increases. That's it. Financial model is
Okay.
one skill that I would suggest everyone should learn. I hope that answers your question, Harsh.
Yes, sir. Thank you for your
Yeah,
answer.
yeah. Thanks, Harsh. Uh, Anyone else?
Sir, do you have any suggestions as to where to study financial modeling from? Like, is there any recommended?
Okay, okay. Bhai, this is not sir. Yashraj would work. Okay, that's number one. In terms of learning the financial model, yeah, from what I did was I learned it from CFI. Have you heard of CFI? CFI is a basically a course that these guys have. Corporate Financial Institute, I think. They had a course they have a subsidy also. So I got around 50% off, and it was a very minimal payment that I did for close to 15,000, I think. It was a 1 year long course that I did. Basically, you get videos, and you can use those videos and you can learn from it, financial model. And there's a test at the end of it all. And the certification is also very nice. Okay, so you can do that. I think I would suggest that's a very good skill that you can do. But I'm saying it's not necessary to do it from CFI. I did it from CFI because I felt that was good. You can do it from anywhere. I think there's a company called Four Vision, right? I'm not sure whether you guys have heard of it. There's a company called Four Vision, which essentially gives out these modeling videos. You can start from there. You can do multiple courses. You can do multiple sort of certifications that you can do, and you can learn from there. And honestly, you can do it from YouTube also. It's very simple. If you can make a historical, balance sheet, income statement, cash flow, you can make a forecasted cash flow, income statement, balance sheet also. And DCF will be a sort of extension to a three-statement model that you make. DCF will be just your free cash flow discounted with a particular rate, and you can reach to your market value or the equity value. But essentially, what I'm saying is, फॉर्मूला बहुत सिंपल होता है. फॉर्मूला हर जगह सेम अप्लाई होता है. What you need to learn is how one change impacts another change. I'll give you an example. Your depreciation and amortization is present in your income statement, and it is also present in your cash flow statement. They should match, right? So if you're changing it in the income statement, it should change in your balance sheet. It should change in your cash flow also. That you need to learn. You don't need to learn how to link one file with another file. You need to know why linkage is required. That is a skill that you will have to learn. That if you can learn it from someone else, well and good. If you cannot, you can learn it from YouTube also. You can learn it from reading your accounting books. It's a skill which it's up to you how you want to acquire. I'm saying it's a skill that you have to acquire if you want to do well. Okay? I hope that answers your question.
Thanks. Yeah.
Okay. Yeah, someone was raising their hand. Sorry, I was answering.
Yes, sir, it was me.
Yeah.
So, actually, maximum of us present here are from the master's degree. Sir, as you mentioned, there's not necessary that we need to have a CA or a CFA or a MBA degree. So, sir, can you just state a small roadmap sort of a thing that MCOM student can follow to match the technicalities that are into investment banking for grabbing the job opportunity?
See, most of the students are from MCOM, you're saying. Okay? Now, from the standpoint of roadmap, learn first. The skills that I talked about learning would be financial modeling, how to make pitches, how to make PPTs, how to make your IMs, how to make your roadshows. Essentially, Excel, PPT. These will be the primary skills that you have to learn. उसके बाद, see, communication, you are either good at it or not. But communication is skill which you can acquire over time. If you can communicate very simply, straightforward, simple, so with time you can acquire that skill. The primary skill that you need to learn is PPT Excel. Okay? That's number one. Now, in terms of how to get into investment banking, that again depends on opportunities. You don't need a CFA, you don't need a CA, you don't need an MBA. You need opportunity. If you're getting an opportunity, well and good. Start from scratch, start from a very small firm. No problem. There's no harm in it. If you get an opportunity, grab it. If you want to enter into this space, grab it. But be very mindful कि मैं क्यों join करना चाहता हूँ. If I want to join, I should be wanting to join it for the right reasons, and the right reason should not be that it's lucrative. It's definitely lucrative. It's a benefit. I'm not denying it. I'm just saying it should not be your only and primary reason. Your primary reason should have constraints from the standpoint of भाई handle होगा कि नहीं pressure, because pressure is there. If you join a small firm, see, I come from a small firm, relatively small, not that small, but relatively small. And since I come from a small firm and a relatively small firm, I know the pressures. I know a lot of issues are there. And you have to be mindful of it. If you're okay and if you are comfortable with the fact that कि हाँ मैं कर लूंगा कर लूंगी, join. First opportunity that you get, join it. Then you can obviously move from one firm to another, obviously. You can grow yourself, you can upskill yourself over the years. That's obviously going to be the case. But if you want to join, grab the first opportunity that you get. Now, I understand you might tell me कि opportunity तो है ही नहीं. That's very true. उसका, especially in the Indian context, कोई shortcut नहीं है यार, honestly speaking. The only thing that you can do is you can try to reach out to people who are working in the investment banking space. You can try to reach out to your seniors who are working in the investment banking space. You can try to apply to companies from their websites, from LinkedIn, from Naukri, whatever. But opportunity milti hai, grab it and try, first of all, try to acquire the skills, and then opportunity milti hai to grab it. I think that's the only roadmap that anyone can follow. And trust me when I say this, MBAs and CAs also don't get this job. Again, it has nothing to do with their degree, and it has everything to do with skills. And I did not have these skills when I joined in. I have also acquired them. You acquire skills. You learn with age. You learn with experience. You cannot have it starting में एकदम. तो वो हो जाएगा. Problem is opportunity. If you get the opportunity, grab it. Hope that answers the question. Yeah.
Yes, sir. Thank you.
Any other questions?
So there was a question in the chat box
Okay.
which said, what's the ideal age to enter IB?
There's no ideal age. I joined IB when I was 27. Okay. 28, not 27, 28. 27, sorry, 27. I joined IB when I was 27. I know people who joined as an analyst when they were 24. There's no ideal age. Since you don't need a degree, there's no ideal age, you know. But if you get the opportunity to start early, you should always start early. Because that helps you. Because if you come from an analyst to an associate to an AVP to VP and etc., then your learning curve is not that steep that you find it very difficult to cope up. If you join as an analyst, your learning curve will be, let's say, 50% of growth in the next 6 months, for example. That will be a learning curve. But if you join as an associate, you will be expected to do a lot more. And if that expectation is there, your learning curve will become extremely steep. And it's a possibility that you might not be able to cope up. So there is no requirement as to when you should join. But if possible, join. And obviously, there are constraints with respect to, degrees and opportunities and everything. Obviously, those constraints are there. But join as early as possible. That's the best answer that I can give. Hope that answers the question. Yeah. Yeah, Niranjan, tell me.
Yes, sir. Thank you. So, I'm Niranjan. I'm a CA finalist, and I've also
Okay.
worked on a financial model before. So, one of the things which I wanted to present through my financial model was that during this September 22nd, there were changes in GST tax rates. So, I was working on Ola Electric Mobility's financial model, and my main intention was showing the changes in GST rates and how will it impact the EV cars and EV sector, EV bikes. Okay, so one of the things through my research I found out was that in EVs, the raw materials which we are purchasing, those will be taxed at 18%, while
Okay.
when we sell the EVs uh, to the final consumer, they will only have to pay 5% GST on it. So there is a big IGST gap, and
Okay.
IGST credit is only available on your exports, which are not happening
Okay.
because
Okay.
it is only in Indian market. So IGST will get accumulated in your balance sheet. This will actually
Okay.
show that the balance sheet is very, very healthy. But in returns, the cash flow statement is extremely, it is negative basically because your
Okay.
money is actually
Hmm.
going out. You're not getting the refund
Hmm.
from government. So that's what I wanted to show from my model. And one
Okay.
of the things was my assumptions were all based on the MD&A section of balance sheet,
Okay.
sorry, of
Okay.
annual report.
Okay.
And from that, I made the model. But what I found out was very soon the market conditions were also changing. So it's
Okay.
not like Ola Electric is doing very well, and the model didn't end up to be very, very realistic. It showed what I
Uh,
wanted to show, but
uh.
it was not extremely realistic. So how can you make a financial model that is realistic for at least some period of time?
See, if you look at things from the outside, you can never make a realistic model. See, when we make models, we get most of the assumptions from the target company. See, when you project a revenue, I'm sure you might have projected the revenue using growth rate, right?
There were a lot of factors. Yes,
Nay, growth rate would be the essential gist of it, right?
yes, yes.
We don't project
It was
the
also one of
revenue
the
based on
factors.
growth. No, no, I'm
Okay.
talking about just the revenue. I'm talking about just revenue. I'm sure you might have projected it using growth rate because you don't have visibility with respect to how much revenue the Ola Electric is going to do next year, right?
Hmm.
So you will use a growth rate.
Yes.
When we make models, we don't use growth rates. We get the projections from the company team. They tell us that they will be able, for example, currently in FY25, they're sitting at 500 crores of revenue. Next year, they'll probably do 660 crores of revenue. Growth rate is extremely high. But again, that is the assumption the company team is sending us. That is what the company is saying, that they'll be able to make this projection. They'll be able to make this number. Now, there are ways in which we can vet it, whether or not the average realization is growing or volumes are growing or not, etc., etc. But in order to make a realistic model, you have to be dependent on the company. Because when you look at things from the outside, you can make a model. You can make a linked model. You can make a model based on various assumptions and etc. etc. But in order for that model to be extremely realistic, to actually look at the exact same picture, what is seen by the management of the company, you have to know the management's perspective. Now, for that MD&A section is there, obviously, but that MD&A section will not have everything. They'll have some things. That is why, from that standpoint, it becomes extremely important. See, what you're doing is good. It's extremely helpful that you are using the correct backup or the correct source to actually make the assumptions. That is true. But exactly realistic model, we also cannot make, even after having so much data about the company, still we cannot make the extremely detailed and exactly the same model as to what will be seen in the future, because we are also dependent on the company and their assumptions. So when we talk about making an extremely detailed and extremely correct or essentially actual model, it's very difficult to make it. But what I would say, if you can use whatever assumptions are at your disposal and you can make your model, that will be enough for you from the skill standpoint. That you can use the assumption and you can place it in the model. That's enough for you. When the time comes when you will have the assumptions of the company, you can make a realistic model then. The interviewer is not going to judge you based on the assumptions that you're making, or whether or not 5% is correct, or 10% is correct, or 15% is correct. They will judge you based on whether or not you have actually incorporate a certain set of assumptions which are necessary to prepare that model. Now, that becomes a skill. Not the fact that 5% होना चाहिए कि 6% होना चाहिए कि 10% होना चाहिए. So I think you should not focus on being extremely correct. You should focus on incorporating everything. Now, 10% can become 15% because that is not in your control. That you don't know. But incorporating the 10% वाला factor जो है वो मुझे consider करना है, that becomes important.
Got it. Thank you. And
ठीक है?
one more thing, we had
Yeah.
some sort of tools like Bloomberg at our
Yeah.
disposal. And because of that as well, I was able to collect some of the data. But I don't think MCOM, like our college, has Bloomberg terminals. So in that case also, where can others as well learn about this? Because it was a very interesting thing for me to do. It was the first time I worked on a financial model, and I had some sort of research and papers and as well available because I'm in Crystal. So along with that, I just would like to know. I would just like to help others as well. How would they find the tools required to or any other data? Where can they find it to make a model themselves?
See, in terms of backup data, historical data, you can always get the annual reports. So I'm guessing you'll be looking at the public companies only, because private companies you'll have to go to MCA. There's a website called MCA where you'll have to look at the financials of a company. For private companies, that I'll leave aside because you'll have to pay for it, leave it aside for some time. For public companies, you can get the annual reports of these companies from their website. You can get it from BSE's website. You can get it from Screener. There's a app called Screener, right? You can just type the name of the company and you can get the document. You can get all the annual reports, historical reports from there directly. Now, if you need everything collated in one page, in one screen, so a lot of companies, let's say like CRISIL, CRISIL, I don't think has research reports, but a lot of companies do have research reports. You can have your PL Capital, you can have your ISEC, ICICI. All these companies release their research reports. Equirus also releases its research reports. So you can use these research reports to get the financials of the company all collated in one PDF. And then you can just copy paste that in your Excel and you can use it. So there are a lot of ways in which you can do it. Most reliable would be, I think, the annual reports of the company. Hope this
Yeah,
answers
thank you,
that.
sir.
Yeah. Thanks, sir. Thanks.